Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so Fed yesterday didn't move. Nobody really thought they were. What we have seen, though, is we had upper band ride. They didn't quite get back there on Tuesday. Yesterday, they bring it in. So our pre-FOMC price, 49.13 half. They screwed around there on either side of that, and then they brought it in at the close. You've seen a bounce from the lows, which are down at 48.66. You can see the daily midband there, the 20-day, the green line, which is really the delineator between a buy dips and a sell rallies market, always has been. And, how does the E-mini like to trade? Upper band, middle band, lower band. Lower band, middle band, upper band. So we've been on this grinding move to the upside. You've seen a little bit of a 2-day correction. Is it going to be deeper than that, longer than that? I have no idea. What I do know is that no meaningful pullback is going to start anywhere above the 20-day. So if all they're doing is coming in here to kind of fool around in the area of the 20-day, just to give the 9-day back up to the upside, then what we're doing is we're creating a higher low. Yet another one, you got here versus potentially here. And if you take out that 49.57, we're going to start printing stuff with 5s on it. It's the same stuff we talked about last week. The same stuff I talk about in the room every day. If the bears don't put up a fight, if they don't turn basic areas like the daily midband into resistance, they are going to get dragged kicking and screaming behind the bus, up, and away. No doubt. No doubt. And it'll go farther and longer than anybody thinks, because you got all these people that are just operating under the assumption that because the market's at all-time highs, it has to come in. No, that's how this all-time high turns into this all-time high 5 days later, with people throwing contracts at it and being wrong every day. So, you want a big pullback? Take out the green line. Then go after the red line. Okay? And then get down here to the lower Bollinger Band, which should be the next, area if you're going to convert middle. Upper, middle, lower. Lower, middle, upper. But these little squeezes keep getting won ultimately by the bulls. And as long as that happens, it's going to drag shorts to the upside. We got up here and we weren't overbought. We weren't parabolic. This isn't parabolic. It's just up there. So was the tape disappointed in the news yesterday? I mean, I guess so. What did they think he was going to do? Cut rates? So I the question of where is this all priced in? I think that's what we're battling over now, and that's fine. It makes for a really nice two-sided situation. Freaking awesome short yesterday. Once it broke that 13.5 delineator. So, you get your pre-FOMC price there, 49.1350. Weekly pivot, 49.06 half. Your new monthly pivot, today's February 1, happy February, 48.4367. So, if I'm the bears, can we get down to the monthly pivot, please? Especially since it conveniently coincides with, you can't see it there because one of the S1 level from the daily pivot is sitting on top of it, but 48.46 is the 20-day, is the green line from the daily chart, the daily midband. That is locked up with monthly pivot. What a nice, convenient place to go and take price for a test today, if you can find your car keys, bears. But so far, losing your grip on the hourly midband is not a good start, since it had been such good resistance here on the Fed reaction, and here, and here. So step one for the bears, get the little blue line back. Get the little blue line back. That's 48.86 half. If you can do that, then you can go after that 66 low and potentially go after 43. Bulls, what do you need to do? You need to get back on top of the pre-FOMC price. You got to get back on top of 49.13 half. You got to do it. You got to do it. And the weekly pivot and all that other stuff that you gave up yesterday. You don't have to go to all-time highs today, but you do have to show up for work. Where we close today, whether it's above 49.13.5 or down 48.43, or maybe we go nowhere, will be very interesting. Don't forget, tomorrow morning we have jobs. So you got another, volatility event hitting the tape. But today is going to be very interesting in the sense that you've got both sides. The areas that both sides need to deal with are pretty far away from price. And if either side wants to, deal with their area, it's going to be a nice little trade today. So you got volume weighted average price coming in 48.83, basically 84. We talked about hourly mid 86.5. Proprietary moving average is 88.5. So I'd say I would say the key zone off the open is basically 84 to 92. We just traded up to 96. That's your Globex high. They pulled it back into 91. It's about 5 after 8 a.m. Eastern time as I'm doing this today. So see how we open, but more importantly, see how we close and how that sets up into jobs tomorrow. All right. Have a fantastic day. Be safe, be healthy, take care. Trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.